How can you tell if your second profit target is realistically within reach? That's a good question. So the way that I do it, Tony, when I'm looking at a stock and I'm identifying my profit targets, all a profit target is, if you're long a stock, a profit target is a level of resistance. If you're short a stock, a profit target's a level of support. Levels that could potentially reverse the price of the stock. How to know that that level is within reach or not? What I like to do is I like to identify the closest 3 to 4 resistance or support levels. So if I'm long a stock, I like to say, where are my nearest 3 to 4 resistance levels? That's what I like to do. The second resistance level that is away from where I'm buying the stock, that's very realistic. You just have to get through one resistance level in order for the stock to get to there. And typically, that first profit target is typically a very minor level of resistance. You don't really want to get into trades where your first profit target is a massive level of resistance, because your first profit target is not going to be my second profit target, which typically is going to be a more major level of resistance than the first profit target. If that's the second level of resistance away from the price that I'm buying, then that's a great trade. The Netflix trade, which we're going to get into in a minute, the major level of resistance was like my fourth or fifth resistance level. So that's why you're able to get into a trade. I bought Netflix at $215. I was risking about $2.25 to my stop loss of like $2.13. I bought it like $2.15 and change, and my stop loss was $2.13. And I got flat today at $249. So I literally, the math on that, to give you guys an idea, that's $34 a share. And I risked about $2.25. I risked about $2.25 to give that. Like that's 15 times. That's 15 to 1 on the final take profit. Now I took profits off along the way. My final take profit was for 15 to 1.